Let me tell you why I think Apple might quietly be one of the best AI plays in the market, and it has nothing to do with building AI. Welcome to Options with Hans. Of course, I am Hans Albrecht, 15 years pro options market maker, another 10 years managing options, income funds, downside protection, black swan style strategies, $750 million in options. Let me tell you why I think Apple might quietly be one of the best AI plays in the market, and it has nothing to do with actually building AI. Welcome to Options with Hans. I am Hans Albrecht, of course. I spent 15 years as a pro options market maker, volatility arbitrage, and another 10 years managing 12 options, income funds, downside protect, black swan style strategies. That's decades of in the trenches experience, and I'm here to help traders and investors play the options game intelligently and with a respect for risk. As always, this is for educational purposes only. These are my opinions, not financial advice. It's your trade and your responsibility. And if you're okay with that, well, let's keep going. Today, I want to talk about one that I'm really excited about, actually. Apple. Apple. I've been bullish this thing for a long time, even as others have said, no, it's done. They're incompetent, which they probably are. But I'm going to talk to you. I'm going to tell you why that may not actually matter in this specific case. And I think the market is, in fact, underappreciating what's about to happen. And as we know, in this new age of AI, age of disruption, age of Claude bots, Molt bots, whatever you want to call them, a lot is changing and very quickly. So, number one, the big picture. This is an important moment for Apple, not because it's an AI company, sort of AI adjacent, but because AI is finally landing exactly where Apple already dominates. I said this 6 months ago. It is in your pocket and they are in the right place at the right time. I've loved Apple probably for about 80, 85 bucks, and I still love it here. What makes the setup different is that Apple didn't try to win the AI arms race, right? They didn't torch tens of billions or hundreds of billions of dollars on infrastructure, on building LLMs. They didn't chase headlines because they're smart. They waited, right? They're waiting for AI to come to Apple. I said this 6 months ago, and it's starting to play out. Everyone is going bananas, trying to cut each other's throats. Software is in complete disarray and big trouble in many cases. And Apple is positioned very well between Apple Intelligence. We've seen news lately of the relationship with Google Gemini. They've got Apple phones. Now they've got Android phones. Between those two, you're getting massive coverage of AI capability for AI within your pocket. And without blowing up your margins. And the margins matter, right? These guys are in a very powerful position now from a balance sheet perspective. So one of my favorite AI adoption without risk stories, with much less risk in the market. And I think that's underappreciated. So discipline is the mode. So what I really like here is that what Apple didn't do, I think that's actually very much the bull case. They didn't spend like drunken sailors on data centers. They didn't try to outdo NVIDIA. They let everybody else subsidize intelligence, right? That's one of my big themes lately. I've been saying, listen, for 200 bucks, what can you get? You can probably get $5,000 worth of AI intelligence, or even more if you turn that into something amazing for your company. That's why everything is shifting to the beneficiaries of AI, away from the areas that are really quite challenged in a number of different ways. So the Metas, the Googles, the Microsofts. I'm not saying these toll booths aren't great. I love each of them for their own reasons, except maybe Meta as much. But they're spending tons of money to to get to where I don't blame them. They need to get to where they are going to be in a good position for the next 100 years, right? This is not existential for these guys. It's existential for many companies out there, but it's existential, and it's how do I get to lead, right? We saw massive spend from Amazon, Google last week. They understand what is at stake here. They don't care that investors might not like that right now. They're going to appreciate it later when these companies continue to basically dominate the world. But Apple didn't need to do that. It just watched. It was smart, right? They don't need to invent the smartest AI. They just need to integrate it into what they have already. Those are very different things. Think of it like this. There's a difference between building the highway and owning the on-ramp, right? Apple owns the on-ramp, 1.5 billion devices worldwide, and that's where AI is eventually going to reach people, right? That's the distribution mechanism to get AI into a very convenient place. And that brand, those margins, the flexibility, amazing company. They've got that chic brand that people love, that pushes that brand power, that margin. And that's really important for them. Not theoretical, right? It's showing up in the numbers. According to PowerPoint research, Apple's on track to outsell Samsung actually, they did it. They outsold Samsung for the first time in 14 years. Think about that, 14 years. So they're expected to ship 243 million iPhones in 2025 versus Samsung's 235. iPhone shipments are roughly up 10% year over year. That's not a fluke. That is a replacement cycle hitting its inflection point. I think we're going to see this in other areas as well, where perhaps there are some challenges out there. So, for example, in computer makers, computer builders, they've got the problem of very expensive memory. But I think this upgrade cycle is absolutely underway, and I think people are willing to pay higher prices to get the best of AI. People want on-device AI, right? So Apple sits in this place where AI goes from your desktop to every other, to sort of think of it as the Internet of Things, right? And AI in devices and sensors and things like that. Apple really sits in that world. They check all those boxes. And Apple Intelligence and their tie-in with Google really makes a lot of sense. So now, what's the other thing that we want to be aware of? Well, this is the part that people aren't talking about too much. This is the sleeper that I think makes the story very interesting. Agentic AI, of course, you've heard of it, right? The Claudebot, Moltbot, OpenClaw, whatever you want to call it. AI agents that can actually run locally. What does that mean? On your machine at home. You can actually put small LLMs, small language models, large language models on, I guess, small language models on your machine. Apple hardware is quietly becoming one of the best ways to run that local AI. It's really a go-to. Developers are really running tools like these OpenClaws. They're snapping up Mac Minis, Studios as dedicated workstations. They just have this unified memory structure. It's kind of a little bit on the nerdy side of things, but it lets these systems punch way above their weight class for running models locally. Now, you don't need one of these. You can run one of these Claude bots on your computer, on your laptop. People are digging out old laptops that they haven't used in a while. It is possible, but if you want to do more, and if you want to run those models locally on your machine, where you don't have to use the cloud in a sense, and save a lot of money on token usage and things like that, there are amazing things that you can do out there. So for $500, $600, $700, $800, these things are flying off the shelves, and I think we're going to surprise there, right? It's not just phones and services. Apple is suddenly Max again, and I think that's about to surprise people to the upside. So this is where one of those rare moments where brand, timing, margins, all this stuff kind of comes together. That doesn't happen very often. So let's take a look here. I want to talk about things from an options perspective. Okay, so let's take a little look at Apple here. We see that we're getting a little bit of green on my old MTI here. Vol came down a little bit after earnings, which is as expected, popped up a little bit here. So probably we'll take a little closer look at option pricing in a moment. But we can see on the chart here, really kind of a lovely breakout right here. Kind of shook you out right down to those sort of breakout spots, couple touches here. Perfect, picture perfect touch of that line. Starts to rally back here, and then I think gets gets a little bit of a sniff of perhaps what's going on out there with these Mac Minis. And here we are. I think really we're going to start seeing some upgrades, price upgrades. I think we're going to see potentially some surprising news out of the company soon. So I would like to position more for that. I'm in, full disclosure, I'm in a lot of Apple. I've been adding here, but I also had some from up here, which I wrote down, but I've been adding. And I want to get a sense for where the option pricing is. We can see, let's take a look at the shorter term option pricing. We're going to look at the 30 delta, right? So one of the nice things about bar chart here is you can kind of get a sense for where each moneyness option is, where the moneyness pricing is. So 30 delta here, looking a little bit out of the money, of course, not super out of the money like a 15 delta, but you can see very reasonable. I mean, it could be a little bit lower, but I think we've seen a VIX 20 lately, and certainly this is a world of disruption as we're seeing in software and other areas. And I think we probably maintain fairly high option pricing levels, or at least they don't go down too much, because I think there's just that overhanging question about about disruption, what that means for stocks, but also from a Fed standpoint, all the other stuff, geopolitical, et cetera, tariffs, government shutdowns, and you name it. This stuff is ongoing, and so we probably, given that this part of the year tends to see a little bit more movement as compared to a December, I think we probably still kind of remain relatively volatile here. I don't know if it's super horse out of the barn, but this is one of the names that's acted very well, especially in this lately in this big kind of tech sell-off. The Qs got hit, semiconductors got hit, and software got absolutely demolished. You guys will remember me. I've been constantly saying that it is in trouble, and I couldn't understand. I tweeted, I don't understand why IGV isn't down more when it was 103, and I think we were in the 70s not long after that. So this is rather serious, I would say. So if we look out longer term, I think this is one of those names where I like playing the upside. I don't think it's very expensive. And like IWM lately, I've loved IWM, and we're doing fantastic on those, and Turbo Trader and Leaps Trader. This is an area where I think you've got a potential re-rating play there. So what do we do because of that? Well, this is where I would take a look at, probably you could be a short-term sort of player, and I think this thing might actually go. So I think there's actually probably a little bit of upside potential. Maybe we pull back a little bit from this old high here. I don't think so, but maybe we do. So I'm not so sure I'd want to position super short. I think we get some strength this week, but over the next few weeks, I'm going to be just a little bit more cautious. But if you give yourself maybe April, which is a couple of months, I think a 305 around 270, a 300 around 380. I think that's actually very reasonable. I'd target probably about a 50% return on those. I think that's reasonable, right? We've had a couple. I mean, when I have these targets, I had a couple people say, we had PWR, we made 98% on it. GLW made 91% on it, and people were saying, well, you had a lower target. I said, well, that's my target, but if I still like it, I'm going to keep it going, right? If a story is very strong, as it has been in infrastructure lately, I'm going to keep squeezing as much as I can out of these trades. So the target is just an idea. It's sort of a minimum that I want to take. But certainly, if things are lining up and looking really good, I may just ride some of these things, because as we know, we have to make the most of those trades that really go well. Now, one of the other trades that I've been doing, and that I'm going to be doing more of this week, is I look out a little past December. I like to incorporate maybe just a little bit. We can see I have a position in here, but I think you can get in here and probably pick up the 310, 320s, a 320 for 15 bucks. I think there's not a ton of downside there. I'd set maybe a 40% stop on that, and I think you could probably, make 75 to 100% on a trade like that. You've got the time, right? So that's always the thing. We got out of a couple positions lately because they were Marches, they were Aprils of this year, and you're starting to run out of time, right? You have gamma, this thing's starting to react very nicely through the strike, but at the same time, you've got higher theta, and you're starting to get long some deltas that are a little little bit at risk. If I own a 1-year option, I can be right and give up a little bit of that because I've still got time for the thesis to really start to play out. So I think a 320 around $15 is very, very interesting. Gives you almost 1 year, and I think, as I said, we're going to start seeing some great stuff out of Apple. So that's the trade for today. The 320 for January 2027 for about $15. If I don't get that price tomorrow, I'm okay paying just a little bit more. But if it pulls back, if it really, really runs in the morning, I'm going to wait and assess and decide whether I need to kind of pay up or not. But I'm happy with 15. I don't want to go too much higher than that for now. But as I said, I already have a lot of stock, a lot of options. So this is, that's a sort of different profile. So anyway, I hope you guys enjoyed that, and we will see you in the next video.